remembering that a no doesn't necessarily mean that your idea is the worst, or that your idea is bad, or that you should abandon it. Remember that it's a marriage that you're getting into, right?
Yeah.
It's they're giving you the money. They know that they will be with you for, let's say, 5, 7, and sometimes 10 years. Approach as many different types of financiers as possible. Don't get frustrated just because you go to a commercial bank and they say no, and you're like, fine, commercial banks are super bad. There are commercial banks, for example, that are starting to utilize different ways of assessing an SME, even in this space. But there are also other banks that are very traditional and very set in their ways of doing their credit appraisals. So just because there has been a one no doesn't necessarily mean it's a no across the board.
Yeah.
We work with donor organizations to make sure that this sustained growth is achieved from an SME perspective, and then that is cascaded down into bringing about economic growth. So that's why that element around sustainability is really important for us. It's just not about achieving the financial returns at a company level, the net profits, but it's also ensuring that the business that we are supporting is intentional about the impact that they're creating in the communities that they operate from. Ensuring that right now you have the right partnerships, because as you know, we operate in an environment where existing in silos is no longer attractive, right? Really building strong partnerships that you can be able to leverage off to scale your product. We've seen that the models that have scaled globally, even when you look at the Airbnbs, it's those models that are leveraged on partnerships. We want to invest in the community, but we also want to see our business grow. So they took the time and the resources in investing in building very robust farmer networks, ensuring that they pay the farmers the right amount of money. And why that is incredibly important is because that farmer, when you pay them the money, they now have an income to take their children to school, to feed their children, to properly house them. So the ripple effect of that investment has really been great to see.
Hello, and welcome to the Money and People podcast, the show where we connect the dots between financial success and the power of human capital. Today, we are joined on the show by Lombe Muzala, who is a sustainable finance expert, and we are going to be discussing the topic access to finance for SMEs in Africa. Lombe, welcome to the show.
Thank you so much for having me. Looking forward to this conversation.
The pleasure is all ours. Now, for those who don't know you, who is Lombe Muzala?
That's always a difficult question to answer, isn't it? To define yourself from a different perspective. But like you rightly said, my name is Lombe Muzala Batunda. I'm a sustainable finance expert. I have worked in the Zambian financial services sector for over 12 years now. I am super passionate about SME financing. And just looking forward to contributing to seeing how different SMEs contribute to the economic growth of Zambia.
Okay. So, how did you find yourself in this space? Is it something you always aspired to do? Obviously, sustainable came along the way, but the finance aspect of it, did you envision yourself in this career path growing up?
Not really, perhaps maybe not in the earlier parts of my life, but obviously as I grew and understood different aspects of the economy, yes, I kind of like had a natural inclination towards finance. I remember growing up at one point when I was in ninth grade or grade 9, and I had like some young aunties that were at the time doing SEMA, and they were struggling with doing like their assignments. And I remember I was like, oh, I think I learned that in like business studies. I can't quite remember what we called it at the time, whether it was accounting or finance or business studies. But then I remember sitting down and was like, oh yeah, I can do this for you, and literally walking them through and teaching them in terms of how to solve that problem. And for me, it was actually quite interesting. From there on, it just came natural. I really liked it. listening to news, like any information that had aspects of business, finance, business news. I was super intrigued by that. And I think I've always been passionate about seeing Zambia develop. That
Yeah.
economic growth for me is something that I've been super excited about. And even sort of like when I got to the point, obviously there's the elements around when you are young, you do really well, you get the 6 points, you
Yeah.
kind of like um, try to make a decision between should I do this course or should I do
Yes.
medicine. Medicine is always an option just because, if you were
Yeah.
good at biology, you got really good grades, everybody kind of like gave you advice towards pursuing that route. But for me, as soon as it was very clear that I wasn't as passionate about medicine, business was the natural second.
Okay, so what did you study at uni?
So I studied economics and
Okay.
then I mastered in entrepreneurship and innovation.
Okay, that's interesting. And in terms of now going the sustainability route, what created that interest in this?
Yeah. So growing up, to be honest, I'd been exposed to different environments, living environments. And that for me, I've always wondered, like, could there be a way in which we could eradicate poverty, right?
Mm.
But then also coming along the way, like I had done a lot of internships before I actually even completed my university degree. So I got exposed a lot more earlier to finance, but sustainability kind of like wasn't where it didn't come to me up until I took, I think, my second job, which was with a private equity and venture capital firm. That's where I really got exposed to sustainability from the perspective of when we did quarterly reports, for example, investors were not just keen on seeing, for example, the return on the investments in terms of actual financial returns, but they were also quite keen on kind of seeing how many jobs had been created by the investee companies, like what social initiatives were those portfolio companies doing. So that I think got me interested, and then reading more about the subjects over the years, doing short courses is really what made me passionate, and kind of like bringing the different aspects between finance and sustainability has always been something that I found to be quite interesting from the perspective of on the capital side, on the finance,
Yeah.
the capital owners really have an opportunity to dictate which technologies scale, which businesses grow, which industries they would like to support. So for me, kind of like bringing that element around sustainability and
Yeah.
capital was something that I was passionate about. And I thought, well, this is sort of like where I would like to build my career in.
Okay, that's interesting. And so right now, what exactly are you doing in this space
Yeah.
in terms of the practical groundwork?
Yeah.
Yeah.
No, so right now, I am self-employed.
Okay.
I own a consulting firm together with two of my other colleagues
Okay.
called Link Advisory.
Mm.
And as Link Advisory, we are an enterprise support organization that is focused on assisting businesses to scale and achieve sustained growth. So basically, we work with different stakeholders towards that big mission. And it includes financiers. SMEs are obviously our primary customers, but we also work with other financiers. We work with donor organizations to make sure that this sustained growth is achieved from an SME perspective, and then that is cascaded down into bringing about economic growth. So that's why that element around sustainability is really important for us. It's just not about achieving the financial returns at a company level, the net profits, but it's also ensuring that the business that we are supporting is intentional about the impact that they are creating in the communities that they operate from.
Okay, that's interesting work.
Yeah.
So for those in the audience who haven't followed, please be sure to follow Link Advisory on LinkedIn, right?
Yes, yes, we are
Okay.
on LinkedIn. Thank
And if
you.
there's any other social handles, you can share them so that we share in the YouTube video description.
Thank you.
Now, coming to the topic of access for SMEs in Africa in terms of financing, we refer to SMEs as the backbone of Africa's economy. And yet the biggest struggle for SMEs is financing. Why do you think this gap still persists?
So obviously, the biggest challenge is really around the mismatch, right, between the risk appetite that financiers perceive versus the actual risk that SMEs carry. there is that element, but there's also the elements around SMEs putting in place certain what can you call them? Certain elements to ensure that they are investment ready, right?
Yeah.
And from that perspective, we mean ensuring, for example, that your financial statements are in order, ensuring that you have a proper and robust scalable plan that you can be able to share with different financiers. So when you look at those elements still persist just because of the inherent challenges that exist. For example, sometimes it could be the infrastructure that makes, for example, it makes it difficult for financiers to be able to properly assess the risk that some of these SMEs carry. Obviously, there's also another element around collateral that most of the SMEs don't have, because as you know, in these markets, in most of the African markets, there are certain uncertainties that come with operating in Africa. So even from a financier's perspective, they want to know that they have some downside protection. So that downside protection, for example, comes in the form of collateral. Now, if most of these SMEs are already struggling with just the basic working capital cash flow to ensure that they grow and that they're growing their businesses, talking about even bringing in elements around collateral is something that obviously is quite expensive for the SME to put forward. So that hampers access to finance quite a bit.
Okay. And I think with that being a barrier, because that gap there, I see most businesses complaining to say,
Right.
look, I have this brilliant business idea. I just need funding. But when I look at the funding opportunities, some of them are asking that you need to be able to generate a certain amount of revenue per year.
Right.
Now, how am I expected to generate this revenue when I don't have the capital? I'm looking for capital. So I think there's that. I think that's why you're talking about the mismatch,
Yeah.
because on the entrepreneur side, it's like we have this expectation that because I have an idea and
Yeah.
I know that this idea, when it has the proper funding,
Right.
it will generate a lot of revenue. But on the funders side as well, it is okay. There are probably hundreds of ideas out there, but which one are we going to risk bet our money on? You need
Right.
to show something,
Right.
right? So like, how do we then fill that gap? Yeah.
So the unfortunate bit in this market, when you compare, let's say, to much more advanced markets, is the fact that the amount of finance that's available at each point as the enterprise is growing is somehow limited. Because like you're saying, you can have a $1 million idea, but for as long as you are lacking the right resources, it becomes difficult to scale, right?
Yeah.
But the challenge also lies in the fact that, for example, for an early stage, you find that that mismatch also happens from the access to finance. So let's say you're an early stage, you've only been operating for less than a year or a year, and
Yeah.
yet the type of financing that you're requiring is something that is appropriate for a much more mature market, right? So that already is a mismatch, because the kind of requirements that an investor would require at this advanced stage versus where you are at is so far apart that it almost feels like, it's just not requirements that are realistic. So I think even from an entrepreneur's perspective, understanding and knowing the stage where you're at and accessing finance that's available for the stage of business that you're at is really important. It takes out a lot of frustrations from trying to access financing that you're not appropriately matched to. So there is that element. However, when you're starting here, there are also obviously like various there are various resources that you can be able to access. So for example, if you're an early stage, what you would like to focus on, because you typically would be considered super high risk by a typical financier. And by a typical financier, I mean these would be financiers or funders that are focused on commercial returns and that are also focused on, of course, seeing impact, but at a much larger scale. So whilst it's $1 million idea, you kind of have to go through the loops to get to that point where you can access the larger ticket size in terms of investments. And so if you're at an early stage, it's really important that you focus on financing that's appropriate for an early stage. And this could be through friends and family. It could be through, for example, the angel business networks. If you do are aware of any, in Zambia, we've got one called ZBAN where you can register interest. If it's not that, you can look regionally. For example, there are also other angel networks that are beyond Zambia. So don't necessarily just be limited to the Zambian angel network. There are also other in Africa and also international ones. There's also venture capital. Obviously, in the market, is quite limited in the Zambian market, but there are also other regional venture capital funds that are coming up where you can access. So at least for the early stage, that should be your focus. And then as you obviously grow in terms of getting that revenue, so if let's say you started at a point where you are making 100K USD in revenues, and then you grow to, let's say you're making $500,000, and then at $500,000, obviously the sources of finance are obviously also gonna change. So
Yeah.
there you may start to focus, for example, on commercial banking, which we have quite a bit of in this market.
Yes.
You can look at private equity firms. This could be local ones from the region, from other African countries. You can also think about pursuing international options.
Okay, that's interesting. And it's good you mentioned how the commercial banks come in. So most of the time, the traditional banks
Right.
exclude small businesses, you know, and we are trying to look at how then do you innovate to position yourself in such a way that you become a bit more attractive. I know you've mentioned that you look for funding like at your level, right?
Right.
But is there any other channels or avenues that you can use in order for you to be a good potential investment opportunity
Yeah.
for the banks and for the other investors?
Yeah. No, that's a really good question, Delia. And the reason why I say that is because even as we are looking at the challenges, we should also be focusing on the solutions. Because
Yeah.
I feel like the more you talk about the challenges, the more you get bogged down by this big problem that you forget that what we're supposed to be focusing on is the solution. So coming back specifically to your question, there are certain things that you can do as a business owner and as a business to ensure that you are a good prospects for different financiers. One of the things, obviously, if we were to kind of like categorize them, there's elements around the foundational elements that relate to your business. These would be ensuring that you are fully compliant with the regulations that govern the space that you operate in. It's also ensuring that your governance structures are strong and robust, even if you're operating at a small level. It's really important to ensure that, for example, you're properly registered, that if you don't have a board, for example, you have an advisory board, that you're making your filings back to back on an annual basis. So those critical commercial, and that you're paying your taxes, right?
Yeah.
So those are the critical compliance elements. And then there's also obviously elements around ensuring that you are strategic enough and that your growth strategy is robust. And that really relates to even as a financier is looking at you, they need to be able to assess that this business, once we give it the money, it's got the foundational elements completely in order. And then the second element is that once we give them the money, they have the potential to scale and grow to such an extent that we can get the return that we expect. So that's where that element around growth strategy is really important. It
Yeah.
needs to be very clear. You need to have a strong implementation plan in terms of how you move from where you are at to where you will be when you receive that funding. And then the other element now basically just refers to kind of like also ensuring that right now you have the right partnerships, because as you know, we operate in an environment where existing in silos is no longer attractive, right?
Yeah.
Really building strong partnerships that you can be able to leverage off to scale your product. We've seen that the models that have scaled globally, even when you look at the Airbnbs, it's those models that are leveraged on partnerships. And the partnership element, also what comes out more importantly, is ensuring that you have a strong business model. And business model really brings all the elements together, right? It's ensuring that you have the right partners, that you're making revenue with the solution that you're offering. It's ensuring that you have the right customers, and that even your marketing and advertising is it's targeted at the right customers. So it's bringing all the various elements, and that you understand fully your cost structure and how much you will be able to make. But really, when you look at the business model, it's just not the product offering that you're focused on, it's the partnerships, it's the revenue model. How will you actually make money out of this?
Yeah.
But it's also making sure that at the end of it all is that you need to make money.
Yeah.
And that's really important. Understanding those margins is really critical, even as you look at scaling.
Okay, cool. And when we talk about SMEs, most of them are considered high risk, right? Too risky for investors. So how can credit risk assessments be made more inclusive?
Yeah. I think with that, there are obviously ways, and there are ways in which it can be made more inclusive. We have seen that in the traditional way, it's been quite a challenge because, for example, for you to assess a particular SMEs, if you're only focused on documentation-based assessments, you have to travel so many kilometers to, for example, go and meet that particular SME, right? So obviously the scaling of it is an issue. That's why you end up seeing that most of the financiers are focused around urban areas, and therefore it's not inclusive, for example, for SMEs that are operating in remote areas,
Yeah.
because then it increases the cost of doing a transaction. So one way in which credit assessments or credit appraisals, for example, could be made more inclusive is really around leveraging technology. And we're already seeing different technologies coming on board from Zambia and even from the region that are really disrupting the traditional way of assessing whether an SME is, whether an SME should be provided with funding or not. So, for example, technologies around digital lending, for example, where there are different financiers that are leveraging typical non-financial data to assess the risk of an SME's. So for example, like they could look at your spending habits. So if an SME, for example, spends so much on a particular expenditure, it tells them certain insights about, for example, the inherent risk that that particular SME could carry. So it's spending, for example, the type of assets that you have on your books could also be indicative of your risk appetite as an SME. So there is a lot of potential that's coming with digitization that I think we can all be able to benefit from. We've seen other models in the market as well. So there's really technology that is bringing forward and spurring a lot of innovation in how financing and credit decisions are being made going forward.
Okay,
Yeah.
that's really interesting. I didn't even know that
Yeah.
there's other methods that they're using to make it more inclusive. And in terms of women entrepreneurs in this space, are there any unique challenges that they're facing with access to financing? And how do we bridge that gap?
Yeah. So with women entrepreneurs, it's the typical challenges that we've always known, right? With a woman, you're doing a million other things when compared to a man. You're ensuring that you take care of your home. You're ensuring that, your children are well fed, that your family is in good shape, right?
Yeah.
So there's that element that most of the women entrepreneurs have to contend with. Now, beyond that, there are specific elements when we come back to the question that you asked earlier around challenges. And I mentioned one of the barriers to access to finance across the board is collateral. But when you actually talk about women entrepreneurs, it's even more pronounced from the perspective of who controls which asset in a household, right?
Yeah.
It's more likely that the man controls the asset. And because they have the asset, they're more likely to get that access to finance as compared to a woman, because the assets that they hold or control is much more limited. So that element around collateral is one of the challenges. There are obviously many elements that are coming into the market and innovations. For example, Bank of Zambia, big kudos to them. They have been able to put up a law or regulation that allows, let's say, commercial banks in Zambia or any other lenders to also take movable assets as collateral. So as opposed to just focusing on a home, they can consider things like livestock, for example, as collateral. They can consider a car as collateral. So that is really a positive thing. And I think that's something that we need to build on in terms of working towards a solution, specifically as it relates to that particular challenge. There's also obviously the elements around gender bias, right? Generally, there has been this assumption that if you're investing or providing funding to a woman enterprise, there are elements around whether they will be able to achieve the growth plan that they are telling you. Whereas if a man, for example, were to come and perhaps explain the same growth plan to, let's say, a loan officer or an investment officer, it's much more believable if it's coming from a man than it would be if it's coming from a woman. So that gender bias also is coming into play. When we talk about the solution, a solution around that is really around how do we grow the knowledge gap to ensure that even the owners of the capital, whether it be commercial banks, private equity firms, or venture capital funds, that they realize and have got the right knowledge to be able to make the right decision. And that really starts with highlighting and bringing to the fore like some of the strong investment cases where funding has been provided to women and how they've played out in terms of returns on investments and the impact that they've been able to achieve. So I'd say those would be the two main challenges and sort of like solutions that we can work around overcoming the barriers.
Okay, and do you have any success stories to share with us?
Yeah, no, there are many success stories.
Maybe you can
There,
highlight one.
yes, no, happy to highlight one. So specifically when it relates to finance and impact,
Yeah.
yes. So there are quite a number, but for me, the one that always sticks out is the one where we've worked with one particular entrepreneur from the time when they were only making, let's say, 2 million kwacha in revenues to a point where they're now making close to $700,000 in revenues on an annual basis. But it all really starts with grit and knowing that, being very purposeful and intentional about the impact that you want to create, both at a community level, but also towards your business.
Yeah.
So this particular company works within the honey value chain, for example. They work with a network of smallholder farmers in the communities. They offtake this honey, they process it, and then they sell it. So at the beginning, they always knew and were very intentional about the impact that they wanted to create from the perspective of we want to invest in the community, but we also want to see our business grow. So they took the time and the resources in investing in building very robust farmer networks, ensuring that they pay the farmers the right amount of money. And why that is incredibly important is because that farmer, when you pay them the money, they now have an income to take their children to school, to feed their children, to properly house them. So the ripple effect of that investment has really been great to see. And then on the company side, obviously, they started out small, only selling through a few supermarkets and filling station shops. They've now gone to sell in the larger chain stores and even exporting. So that really just goes to show you how, with capital, you can be able to do so much good.
Yeah.
But it's also important to highlight because a lot of people have this perception that, impact capital first intends to achieve impact before it achieves financial returns.
Yes.
It's really important to understand and know that for every amount of capital that is put out there, specifically as it relates to impact, it's first of all the financial return and then the impact. Because for as long as there's no financial return, there is no motivation for people to continue bringing about this impact.
Okay. And further, how can public-private partnerships or donor funding help to unlock capital for underserved SMEs?
So again, coming back to some of the challenges, if we were to build off of the challenges that we've mentioned,
Yes.
right? We spoke about collateral being an issue, right?
Yeah.
We spoke about the fact that some credit appraisals are not very inclusive.
Yes.
We spoke about this knowledge gap, information asymmetry, for example, as it relates to women entrepreneurs. I would say those challenges form some of the core areas that the donor community perhaps could focus on, right? And I said donor community from the sense that if the digital, for example, if the digital infrastructure doesn't exist to allow different funders to tap into it, access the data that they need to make the right decisions as it relates to risk for the SMEs, it becomes impossible to extend that credit. So that's why it's really important that it's sort of like the donor or public financing that takes forward this step in putting together, in kind of like creating this digital infrastructure that different financiers can be able to tap into. Because once you have a private entity start to create that, then they would want to keep it to themselves. So creating this general body, not just the body of knowledge, but also the digital infrastructure where different financiers could be able to tap into is obviously becomes a critical issue that the donor community perhaps could play a role, and specifically the government as well. Then information asymmetry, I think already there are different donor communities that have played a huge role in kind of like centralizing the information. And by that, I mean, for example, there are different financing options that exist that other SMEs don't even know they exist. So the donor community, I think, has done a good job, specifically those ones that focus on enterprise support programs. They've done a really good job in making sure that the information, specifically as it relates to different financing options, has been decentralized, and there's many SMEs that know about this information. So yeah, so if we just talk about those elements, I think it's the digital infrastructure is quite key and central. Then there is the information sharing. And then the other element that we spoke of when it comes to the challenges was the collateral element, right? And the collateral bit is obviously the biggest nut to crack, because if it were your own money, you can understand why, even from a financier's perspective, they would choose not to fund certain things, because for as long as you don't have full insight into who you're lending to, you're somehow not very comfortable in extending that financing, right? So it's the same thing. That's why collateral comes in quite handy from a financier's perspective, in that they know that if everything were to go wrong, they've got a fallback plan, right? Which is that collateral. But then we also know it creates a challenge from an SME perspective. So one way in which we can get over that, and for the donor community to contribute, is perhaps, and the government as well, because it's more public finance, right? Is to ensure that perhaps they start to think around what sort of mechanisms could be put in place to lower the collateral requirements for the SMEs. So instead of what currently persists in most of the African countries, and specifically in Zambia, where the collateral requirements is 120% of their loan that you want to borrow, perhaps that could significantly be reduced. We've seen mechanisms, for example, such as credit guarantees, which would lower that. However, I think we need to see more innovation in that space.
Okay. So, Lombe, looking at the future, what financing models or trends excite you the most when it comes to inclusive growth?
So we are seeing a lot of innovation happen within the digital lending space, what I was telling you about. And for me, the one thing exciting about that digital lending space is the fact that, for example, we know that the agricultural sector is a huge GDP contributor in our Zambian case, but it also creates a lot of jobs. But the challenges of the smallholder farmers continue to persist, right? They their output levels remain fairly low. They are non-mechanized, right? They don't have any machines to be able to raise that output level. And they always struggle to get access to finance to basically get the working capital that they need to buy the inputs, right? So with this digital lending, there is an element around being able to actually create a footprint for that smallholder farmer to access funding from the perspective of, ensuring that, for example, they can get access to working capital through their spending habits. A financing institution can be able to make out their inherent risk. They can be able to extend loans specifically as it relates to irrigation, which would allow them to farm more in a year as opposed to being dependent on just rain-fed agriculture. And therefore, it allows them an opportunity to kind of like scale. So digital lending for me is quite exciting. And if we can really nail it and continue to build on this public digital infrastructure that would allow different financiers to tap into, it's really got potential to make financing more inclusive to even like the smallest enterprise that's operating in a remote area. But also making it more feasible and more possible for the larger ones, right? Because for as long as the risk around the smaller ones is reduced, there is potential to scale both ways. There's no way, there is no need to think that perhaps when access to finance is opened up for the smaller ones, then the larger companies have got potential to suffer. That wouldn't be the case. So digital lending is obviously a plus. Another element I would say would be supply chain finance, right? We've seen it work really well, for example, in the case of where you have an anchor company, which would be like a larger off-taker. This larger off-taker basically provides information to a financier about the spending habits and the supply cycles and supply information that they basically have for their downstream enterprises.
Okay.
So then that makes it possible for the financier to make an informed decision about what sort of financing is appropriate for that supplier to the larger anchor or off-taker. So I think that also has got potential to really scale, especially, for example, as you look at the mining services industry, as it starts to come up with, right now we know that there is a big projection around ensuring that we scale up copper production. And therefore, there is a lot of ripple effects that could potentially be created by ensuring that the suppliers to the mines are also benefiting in terms of scaling, growing their operations and therefore selling more to the mines. So I think supply chain finance is really critical, but it obviously requires the buy-in of the larger anchor firms. The biggest hindrance around that is the fact that most of the larger companies don't want to get bogged down into providing this information to different financiers. But if we can go past that hurdle and create some sort of infrastructure that allows them to do that seamlessly without necessarily taking too much of their resources, then that also has got a lot of potential to scale up supply chain finance. And then I think another one is revenue-based financing, specifically as it relates to tech companies. I think it's also got scale it's quite exciting, but it's also got potential to scale from the perspective that it's one product that gives the upsides and downside protection. If the business goes well, the financier has got a benefit to get more money for the level of investment. And then if there is low revenue, the SME then is protected in that they don't necessarily have to spend money out of their pockets trying to meet, let's say, a debt obligation, because then they know if they haven't made money, they pay less. If they make money, they pay more. So yeah, I think those three are really quite exciting for me.
Okay, and that's really interesting. So when you were talking about the very first one, and you gave the digital infrastructure, and for parties in this, like the small scale farmers and all that, what are the enablers to this exciting transformation? And how would government come in? Because people like to just look to the government as this potential funder through the citizen economic empowerment. But then how do you make sure it doesn't just end in that financial support? How do we make it sustainable? And what are the enablers at play to make this digital infrastructure technology that's going to happen to make it a success.
Right.
Yeah.
So you see, the one thing for me that I've been really excited about is if government can be able to utilize the different data points that they already collect. There's already a lot of information that exists, right?
Yeah.
Let's just even take one example. Right now, the way it exists, like I was telling you, as I was explaining, specifically as it relates to the digital infrastructure, because
Yeah.
that is the biggest spend that the government will have to consider, even beyond giving individual loans. They really need to invest in that to open up the financial services industry to
Yeah.
even international capital to flow in, right? And that really begins with making a lot more information public.
Yeah.
And we can find a way in which we can anonymize it. But for example, there are so many companies that on a monthly basis provide or make a submission for what towards tax returns, right?
Yes.
How can we utilize that data, for example? Because already from a financier's perspective, if they know that you're compliant with taxes,
Yes.
and they know that you're paying so much every month, and they can see that trend of how much you've been paying in taxes, even if you didn't have your audited financial statements, that already for them is proof
Yeah.
that you have grown, right? They can see the
Yes.
numbers, because obviously with tax, it's a graduated system. So the more you make, the more you pay, right? Obviously, there's a tip off at some point where that correlation isn't a one-to-one, but sort of like it holds true up to a certain point. So seeing like, coming back to that digital infrastructure, it's really kind of like mapping out that information as it relates to ZRA, for example. We have finally seen, for example, the MNOs make information a lot more public about the mobile money transactions that you make, right?
Yeah.
That is all part of the digital infrastructure that can be brought together, like the data that can be brought together to build this public digital infrastructure that financiers can play into. So things like taxes, things like NAPSA records. And I'm not saying that you start showing that, this is how much
Yeah.
daily I earned and this is how much we contributed.
Yeah.
But I feel like there are ways in which we can anonymize
Controlled.
that
Yeah.
data
Yeah.
and still be able to contribute towards that. Mobile money payments, for the longest time, statements were not being provided. Now we've gone into this space where you can go and get, or even you can have your statements emailed to you for the last 12 months or 6 months
I
that
didn't
you've
even
done.
know that.
Yeah, for the longest time it wasn't possible, and then all of a sudden you can do that. They can
Yeah.
email it to you. That information can be used because then they can show the amount of
Yeah.
money that's coming in and out of your
Yeah.
account. So it's really changed, both from an SME perspective and from the consumer perspective.
That's very interesting because I know for most bigger funders, they'll be like, can we see the bank statements?
Yes.
12-month
Yeah.
bank statement. But now we know that we are really utilizing the MNOs,
Yeah,
right?
yeah.
So to ask for a bank statement
Yeah.
when most of your transactions are now lying in this other platform,
Yeah.
I think it's really interesting, and I'm happy to hear that we are able to now get those
and
statements.
even just to build on that, right?
Yeah.
Because before, most of the SMEs, and if we now talk maybe even at a micro and even medium level, there are a lot more companies that are doing mobile money transactions, right?
Yes.
So you go to, for example, an MFI, or you go to local bank, you only show them the bank statements. The amount of money that, for example, they are going to determine as the appropriate level of capital required for you to scale might be lower if you don't have
Yes.
something else to supplement
Yeah.
with, to show them that, yes, whilst I've had only, let's say, 3 transactions on my bank account, I've had like 50 transactions on my
Yes.
mobile money account. So that is something that's also interesting. And, if we can have more financiers also come to the party and make sure that they are utilizing the data that's becoming available, it would be super useful. And that's where, again, the role of government really comes in. Beyond building the data infrastructure, is how can they put in place certain incentives that when this infrastructure now exists, it compels different financiers to utilize the data and make those credit or investment decisions.
Yeah.
Yeah.
Yeah. I think it's an interesting space to watch.
Yeah.
I will be watching it.
Yes.
Yeah, but what role do you also believe that young professionals in Africa can play in shaping more inclusive finance systems?
Yeah. I feel like the youth are always motivated. They're a lot more able to take very high risks,
Yeah.
and therefore, from the perspective of them playing a significant role, I think there is a strong role that they can play in utilizing the current technology, artificial intelligence, to
Yes.
see how they can innovate um, products that are appropriate for different SMEs.
Yeah.
And appropriate, I mean, for the level of operation that the SME is currently at. So, super excited about that, how they're going to use technology to really financially engineer different products, but also the youth, I feel, are a lot more better placed to take the right decisions, and take the right decisions, but take the right decisions that can move forward the financial services industry. Because sometimes, you know, as with experience, you've been in the sector for such a long time
Yeah.
that if somebody, for example, were to bring you a particular investment, you
Yeah.
almost just look at it with a quick perusal, and you can just all see like the red flags, the
Yes.
risks, right, that come
Yeah.
with that. But with the youth, they're coming in with a fresh perspective, fresh eye, and therefore the way they view different investment opportunities is going to be different. So I hope that they are just as ambitious in kind of like being bold enough to contribute towards the financial services industry by utilizing the technology, by utilizing some of the products, for example, that have worked in the past, and those that haven't worked, kind of like seeing how they adjust to move them forward.
Okay.
Yeah.
Interesting. And in conclusion, I know there are a lot of people that are trying to get financing and
Right.
it's been frustrating for them. I mean, these are daily conversations. So I would like you to speak to the camera and give a piece of advice to
Yeah.
an SME owner who's struggling to access finance. So, yeah, you can take it away.
So I would say there are certain elements that you need to be aware of from the get-go. One of the elements is that when you're starting to fundraise, it's going to be a long journey. It's such a long journey because a lot of people think if I'm looking for long-term finance and long-term patient capital, right? This would be capital where the capital owners would not be requesting to give it back after a day.
Yeah.
If you're looking for that type of financing, you really need to know that it takes time, it takes
Mm-hmm.
grit,
Mm-hmm.
and it will take quite a bit of stretching from your side, especially if you're operating at a small scale, right?
Yeah.
In that you need to remember those elements that we were talking about, or the categories around ensuring that your foundational elements are great, ensuring that your growth strategy is robust, and then ensuring that your business model is superb. So
Mm-hmm.
working on all those elements and remembering that a no doesn't necessarily mean that your idea is the worst, or that your idea is bad, or that you should abandon it. Remember that it's a marriage that you're getting into, right?
Yeah.
It's they're giving you the money. They know that they will be with you for, let's say, 5, 7, and sometimes 10 years. They're looking at elements beyond just your business model.
Mm-hmm.
So you really need to kind of like separate your individual self from the business, and to know that a rejection isn't necessarily a rejection to you as a person, but it's a rejection to the idea. And that rejection can be based on a number of things.
Yeah.
One of them is obviously the fact that they don't see the growth strategy as being aligned to their ambitions or objectives.
Yeah.
Or another thing could be is that maybe they don't believe that your growth strategy is as ambitious or is as feasible,
Oh.
or the fact that maybe you've grown at such a small level, and if they're an investor, for example, that only exists in a business or only invests for up to 5 years, they want something that grows much quicker. So if, for example, you haven't been able to historically demonstrate that you can grow as quickly, they might say no. So it's not necessarily that your idea is bad. It's just based on a number of issues. And that's why when you are looking to raise, approach as many different types of financiers as possible. Don't get frustrated just because you go to a commercial bank and they say no, and you're like, fine, commercial banks are super bad. There are commercial banks, for example, that are starting to utilize different ways of assessing an SME. even in this space. But there are also other banks that are very traditional and very set in their ways of doing their credit appraisals. So just because there has been a one no doesn't necessarily mean it's a no across the board.
Yeah.
Yeah.
I hear you. And I think one of the things that is strongly coming out these days is the grit that you talked about. Because what most people don't realize is even if you do get that funding, you have to keep proving to the funders that this is still viable. Your money is still in the right hands. We are still compliant with ABC. We are still generating profits. And sometimes if you're not generating profits, in those times, you need to demonstrate what your strategy to grow and then optimize is going to be. So I think it ends in, I need funding. Someone told me, no, obviously banks will not give me the funding, but even for my relatives, I've gone to a couple of them with my business idea, but they are not supporting me. But it's the same thing. Like people want to see, like, I mean, if you've gone approached 3 different relatives and they both said no, then you probably need to look at your business plan. What are you promising in there? What is your basis for your assumptions that you've included for how you're going to generate this much revenue? I think people also, they want to protect, they even if it's your relative, I mean, they are thinking about okay, this is an investment, I have to part away with this money, am I going to get a return? Is this money safe? Isn't it better if I invested it myself in this and that? Because also the people you're approaching may have their own business ideas. So I think sometimes we tend to just think, oh no, I was rejected, but there's a lot, like you said, that goes behind that rejection, and maybe there's just a few things that you need to tweak to show that you're ready for this kind of investment. So I think it's been quite an interesting conversation.
And you know, sometimes a model, right, like I was also mentioning, it's not so much that there's even something wrong. Sometimes it's you've 3 people have said no to you, not because it's a wrong idea, not because it's a wrong model. It's just because they don't buy into your vision, right? So sometimes, they don't just buy it. They don't see the future. For you as the person who's the vision carrier, you need to be able to see that path. And for as long as it's very clear to you on how you move from this point to the other point, even if other people around you don't see it, unfortunately, the burden that lies with you is being able to carry them along until they're able to see the path. So just having that, there's obviously also there's wisdom in knowing that, you know, perhaps the way I'm seeing this vision is different, or it's maybe not feasible. Can I restructure? There are ways like that. But then there are other times when you really can see it clearly and it makes perfect sense to a few others other than yourself. So even if the ones you're looking for financing from don't see that vision, you kind of like have to just carry them along until you get to that point where they can see the path. So that's also very important to note.
I hear you. And I think we had a couple here that went through like should have been the Standard Chartered Innovation or Bongo Hive or something, and they were talking about how they thought they had an idea, but after several rounds of that idea, they poked holes into it. The idea that they came out of that program, which was finally funded, was very different from what they started with. So sometimes you may have this idea, and when you go to people for funding, they say no. You don't go further to get what that no is about, because those no's can help you refine what your idea is, but you just might walk away bitter that 3 people have rejected my business plan.
Exactly. That's the end of it.
So it just shows that it takes a lot of work. If those people, they had to go, is it 3 rounds of poking holes, and we just want someone to fund us there and then with one shot. It shows that you really need that grit that you mentioned. So thank you so much for sharing.
You so much for
and to the audience, what really stood out for you in this conversation? What have you learned about access to financing for SMEs in Africa? And don't forget to follow Link Advisory on LinkedIn to be able to connect with Lombe as well as her colleagues on what they're doing in this space of sustainability in terms of finance. This has been the Money and People podcast. don't forget to like, comment, and subscribe to our YouTube channel. Thank you. Bye.